Hey guys, welcome back to the show. Today I was looking at my Ally account and I noticed something on the computer screen. I had a bunch of little D's next to some of my accounts. Those means I'm getting a dividend. So it made me decide that maybe I should make a video and talk about some of the important dates and some of what they mean when pertains to dividend investing. There's 4 important dates we have to think of. 4 important dates. First one is the declaration date. The declaration date is when the board of directors of that company comes together and they declare that they're going to give a dividend. Now, that's usually a month to 2 months before the next one, which is the ex-dividend date. Now, the ex-dividend date is really the most important of the dates from an investor's point of view, because you have to own the stock at least 1 day prior to the ex-dividend date to receive that dividend. Now, once they put out the ex-dividend date, a day to 2 later, they're going to come out with the record date. And what the record date is when they record all of the investors that own shares of that company that are going to receive the dividend. Now, the last one, number 4, is the payment date. That's when we're going to get paid, right? That's the day we're waiting for. Now, if we look at my example from Ally, I have a Coca-Cola date that's coming up, and the ex-dividend date is September 13th of this year. And it has a payment date of October 1st. Now, it shows that I'm going to get a 40-cent dividend for that quarter per share of my stock. So, that made me think about a couple other things that are important with the ex-dividend date. And we're going to talk about dividends and how they are taxed. Now, first of all, you have 2 different kinds of dividends. You have qualified dividends and you have non-qualified dividends. Now, qualified dividends are almost always paid by American companies or foreign entities that do a lot of business in the United States. If the company isn't qualified, you can't get qualified dividends from them. Now, in order for that qualified dividend to be qualified for you, you must have held it at least 61 days before the ex-dividend date. So, if you buy that stock and, well, you have to buy it before the ex-dividend, you have to hold it for at least 61 days. So you can't buy it and turn around and sell it right away and expect to get that dividend. If you do, you'll get the dividend, but you'll pay ordinary income tax levels, which we know go all the way up to 37%. Now, on the other hand, if you hold that dividend long term, like we always talk about on this channel, buy and hold investing, right? We're not day traders. We buy and hold long term. Now, because we hold it long term, it becomes qualified. Now, the differences in qualified dividends are this. If I make up to, as a married filing jointly couple, you guys, let's talk about that first. If I make up to $78,750 or less for the year, I don't pay any tax on that dividend if it's qualified. Now, I'm only going to pay 15% on that dividend up to $488,850. And if it's above that level, then I'm going to pay 20% on the dividend, 20% in taxes. Now, there is one caveat we're going to talk about. As of 2013, we have a new surcharge of 3.8% called the NIT, the net investment income tax. Now, who gets charged this? If you're a married filing jointly couple and you make over $250,000, you will be assessed the 3.8% extra tax. Now, if you're single, it's $200,000. So what that effectively says is, let's say I make $250,000. So I'm going to be taxed for the qualified dividend at 15%, but I'm actually also going to have 3.8% for the NIT tax. So my effective rate will be 18.8%. Now, if I make over the $488,850 mark, then I would actually pay 23.8% for the qualified dividend as well as the NIT tax. So these are things you should think about when you're doing it. Now, of course, if we hold these investments in a Roth, for example, we don't have to be concerned with the taxes. If you have these in a taxable account, you guys, if you have this in a taxable brokerage account, you need to take consideration of the taxes. This is another reason that buy and hold investing is superior to short-term buying and trading of stocks. Now, whether we're talking about individual stocks or we're talking about dividend-paying ETFs, it's the same. They still use the same days. They have an ex-dividend date, they have a payment date, and all that stuff is the same as far as whether you're talking about individual stocks or dividend-paying ETFs. All right, you guys, I hope you got something out of this. If you have any questions, leave them in the comments. If you like the channel, give me a thumbs up. It helps. Subscribe. I'm finally getting some subscribers coming out there, and I appreciate all of you for subscribing. If you have anything you want to hear in specific, let me know. I will make a video about it. All right, till the next time, we'll see ya.